Exciting news in the world of economics as the BRICS nations, which comprises Brazil, Russia, India, China, and South Africa, is working towards developing a new international reserve currency. This shift represents a direct challenge to the long-standing dominance of the petrodollar, with countries around the world diversifying their foreign exchange reserves away from the once unassailable dollar. So much so that U.S. Central Bank Chairman Jerome Powell has even acknowledged that there's room for multiple reserve currencies. This has left many wondering whether this is a sign that the dollar's long reign is coming to an end. However, is that really the case? Welcome to Around the World, and today we'll be looking at how Saudi Arabia and Turkey could end the petrodollar with BRICS. The actual strength of our currencies is tied to the performance of the US dollar, which in turn relies on debt and global trust in a fragile monetary system. See, in the past, prominent currencies were backed by gold, a stable asset immune to the instability of our current debt-based system. However, this all changed in 1971 when U.S. President Richard Nixon removed the dollar from the gold standard, securing America's dominance in the global economy, but also dooming the future of the monetary system to inevitable crashes and potentially a collapse. And now, as countries diversify their foreign exchange reserve currencies and work on developing new international reserve currencies, it begs the question, is the reign of the US dollar finally coming to an end? In the modern world of today, fiat money is an elusive concept, existing mostly in the digital realm as a system of codes and calculations with little tangible backing. Although businesses depend on it and individuals rely on it for basic necessities, the fact remains that it is not backed by any material assets, subjecting it to potential seizures, alterations, or removal from accounts with little immediate impact on an economy. Essentially, banks have the power to edit these numbers on screens at will, and even physical cash is not immune to this reality. And sadly, as we continue to shift towards a more digital world, the fragility of our monetary system becomes ever more apparent. And as the Wolf of Wall Street famously stated, our markets, stocks, and currency are simply fugazi. A crucial component of the monetary system and America's grip on it has always been the petrodollar, which entails the use of US dollars for trading and selling oil globally, particularly from Saudi Arabia and other members of the Organization of the Petroleum Exporting Countries, also known as OPEC. This agreement between Washington and Riyadh in the 1970s, coincidentally signed 3 years after Nixon abandoned the gold standard, not only ensured the kingdom's military defense through US guarantees, but also secured a consistent inflow of foreign investment in U.S. Treasury bonds and debt via the Gulf states' reserves. This stable flow of funds, akin to a successful business strategy, effectively paved the way for numerous other reserves fueled by the dollar's steady rise and increasing global trust in its dependability. It was essentially one of the monetary system's most critical components. Now, last year, when reports emerged that Saudi Arabia was contemplating oil trading with China in the UN, the significance of the potential shift could not be overstated or downplayed as it spelt the potential end for the dollar. See, despite some pro-Western analysts dismissing it as a mere symbolic gesture or a political ploy, the recent actions of the kingdom suggest that they're serious about the plan. In fact, so serious that, at Davos in January, Finance Minister Mohammed Al-Jadaan made it clear that Riyadh is not only willing to trade in the yuan, but also other currencies as well. And the crazy part is, it's not just Saudi Arabia, as several other U.S. allies, including India, Pakistan, and the UAE, have also made deals with China or Russia to purchase oil or other commodities using their respective currencies. In fact, the most recent country to break away from dollar hegemony is Iraq, which announced plans to regulate direct trade with China in yuan. Perhaps the craziest part of this decision is that the decision of several countries to shift away from the dollar and embrace a more decentralized global monetary system is causing a ripple effect that is quickly gaining momentum. See, the move has been fueled by Washington's hard-hitting sanctions against Russia during its invasion of Ukraine, which was perceived as a major miscalculation by many on the world stage. While it is not our place to defend the actions of the Kremlin and its special military operation, it is clear that the US has made a devastating mistake in its efforts to punish Russia. This is because, by cutting off Russia from the SWIFT payment system and freezing over $350 billion of its gold and foreign exchange reserves, the US has undermined its own currency and triggered a loss of trust among many countries, particularly those in the global South who have long been wary of US hegemony. So, as a result, these countries are now questioning the viability and risk of holding their reserves in the mighty dollar, which has been the dominant currency for decades. This shift away from the dollar is a significant development that could have far-reaching implications for the global economy, and it is a nail-biting situation that continues to unfold as more countries join in this movement. The war in Ukraine has become a pivotal issue for the US, as it represents a significant gamble that could either resecure the dollar's fortunes or further jeopardize its dominance as the global reserve currency. See, the outcome of the war will ultimately determine whether the US can restore trust in the dollar as a stable and reliable currency, or if it will suffer an even more catastrophic blow to its economic and political standing. For this reason, the war in Ukraine carries immense weight and much is riding on its outcome. However, Saudi Arabia has taken a different approach, choosing not to rely solely on the results of the war to dictate its foreign and economic policies. That's because it has opted to maintain strong relationships with the US while simultaneously expanding its ties with Russia, China, and other powers to the east, which in itself is an extremely smart move. While Saudi Arabia will continue to trade predominantly in dollars in the foreseeable future, it remains open to accepting other currencies, even if that means challenging American hegemony and breaching the petrodollar agreement established with Washington decades ago. To really solidify things, the Kingdom of Saudi Arabia has expressed interest in joining the economic bloc BRICS, which currently includes Brazil, Russia, India, China, and South Africa. Saudi Arabia, however, is not alone in seeking membership, as Iran, Turkey, Algeria, and Egypt have also expressed a desire to join. See, rather than an exclusive club for the fastest-growing economies in the developing world, these nations view BRICS as an opportunity for countries in the global South to band together to challenge the dominance of the US dollar or secure a place in the attempt to do so, with many believing this is their best chance to do so. Many economists and analysts are already speculating on the potential effects of countries selling their US dollar reserves, particularly those of China, India, and Saudi Arabia. They believe that if a coordinated effort were made to sell or drop even a fraction of their reserves, it would severely dent the dollar's strength and reputation. The US currency's dominance has been challenged before, and global dollar reserves held by central banks have been declining for the past 2 decades. However, the threat to the dollar's supremacy has never been as significant as it is now. The potential collapse of the dollar would have far-reaching consequences, both domestically and internationally, as it could lead to a significant devaluation of the currency, causing inflation and economic instability in the US. Meanwhile, the international community would be forced to adjust to a new global economic order, with potentially profound geopolitical implications. And so as the BRICS nations push forward with their plans, all eyes are on the future of the dollar and what it will mean for the global economy. The stakes are high and the outcome is far from certain, but one thing is clear: we are witnessing a pivotal moment in the history of the global economy. But what do you think? Is this the end of the petrodollar, or is this coordinated effort bound to fail? Let us know in the comment section below, and if you liked the video, why not like and subscribe for all the latest in world news? And while you're here, why not check out this video? Until next time, bye.